Hey everyone, welcome back to Cutting Through the Noise for our weekly investment briefing. I'm Jonathan Galvez, Director of Portfolio Management, filling in for our CIO, Tony Welch. Now, let's dive into the latest market updates. Last week was packed with new data on home sales, durable goods orders, and core inflation. Good news, core inflation measured by the Core Personal Consumption Expenditures, PCE, index came in cooler than expected. This index tracks the price changes of goods and services, excluding food and energy, and is closely watched by the Fed. We believe these lower than expected figures might support a potential Fed rate cut later this year, potentially at the September meeting. The S&P 500, which tracks the performance of the largest 500 US companies, is showing resilience. It is expected to see earnings growth of 8.8% for the second quarter of 2024, the highest we've seen since the first quarter of 2022. Analysts are optimistic that this upward trend in earnings will continue with double-digit increases forecasted for 2024 and 2025. And well, this earnings growth isn't just among the big players, also known as the Magnificent Seven. It includes names like Apple, Amazon, and Microsoft. Sectors like communication services and information technology are also leading the charge broadly. Also, corporate profit margins, which show how efficiently companies are turning their revenue into profit, are strong. Over the past 6 months, analysts have been revising earnings estimates upward, fueled by positive guidance from companies, especially in the industrials and healthcare sectors as they gear up for the new fiscal year. Meanwhile, oil prices are on the rise, driving growth in the energy sector. Crude oil prices recently hit $81 per barrel, up roughly 10% from levels just a month ago. All in all, these numbers show a market that's bouncing back after some uncertain times. However, not everything is smooth sailing. The housing market is feeling the squeeze from high mortgage interest rates, with sales of previously owned homes declining for the third month in a row. The financial sector, which includes banks and other financial institutions, is also facing some challenges due to the ongoing market volatility. Despite these headwinds, there's a cautious optimism in the air. About 60% of S&P 500 companies have issued negative earnings per shares guidance for the second quarter of 2024, but overall sentiment remains positive. Looking ahead, market performance will likely be shaped by factors such as inflation trends and the strength of the labor and housing markets. And we believe that diverging strategies among central banks could also greatly influence global market trends. Now, for instance, while the Bank of England is hinting at potential rate cuts, the European Central Bank has already made some reductions. As always, we recommend navigating the financial markets with vigilance and adaptability. Stay tuned for more updates next week, and thank you for listening.